From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 28, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Today's news calendar is fairly quiet, so we will be looking for the market to react off some of the technical levels that I'll discuss here in the video analysis today. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USD CHF. Looking at the dollar franc on the daily time frame, there's this big black box that I've drawn on the chart. Started all the way back in mid-May, where the market has, for the most part, been contained within this black box. There's been two previous times where the market dipped down to the green zone and then dipped down to the purple zone and then rallied and got back inside that range of that black box. Well, this is our third attempt underneath that range. We see the market on Friday breaking out underneath the 9600 level and bottoming out down here just into the mid 95s. 95.50 to 95.30 is that green zone. We've seen it here before. The first time it touched it, it bounced back up and got inside the range. Second time, we hesitated here for 3 days and then made our way down to the purple zone. So we'll have to wait and see what's going to happen here. It's either going to bounce back up after the gapping lower on the weekend and hit back up here towards the 9600 level, or it's going to break through 95.30 and go lower. We already know where it's going. It's down to the purple shaded area into the mid to upper 9400s. Let's zoom it in a little bit here on the chart, and you can see that pretty clearly here where the market has now pushed down here into the green zone, hesitating here now on a lighter news trading day. So one of two things: it's either going to bounce back up. We'll watch for clues to support and reversal this week, targeting back towards the 9600 level in the purple zone, or the next opportunity will be that it breaks under the green zone and continues lower down towards the purple shaded area. Sell off of the US dollar will lead us down towards the 9400s once again. If the dollar rallies, we'll see this turn back higher. Down to the 4-hour time frame. As we get down here to the 4-hour time frame, we see that hesitation. The gap, truthfully, has already been filled and satisfied here since the weekend push lower. So I don't think we can really count on that as a strategy to fill the gap because it's already happened. If the market rallies again back above 95.50, if we can sit back on top of 9600, I think my confidence will increase on a turn back higher towards the pink zone. So it needs to get back above here to head back up to the pink shaded area. If it can't do that, if it's unsuccessful in doing that and we see the market get underneath, again, we're back down here towards the purple shaded area for the dollar franc today. Moving on over to the euro dollar, EUR/USD, we are at the highest high of the trend. Take a look at this. Since the beginning of the year, really, we are at the highest peak high of the trend. I could zoom out a little bit more, quite a bit more, and tell you that the last time we were here was all the way back into really 2014. Let's move this line over a little bit, this red line back here. The last time we were above the purple shaded area was back in 2014, end of 2014. So we're quite a long history underneath this area right into the mid 1.1900. So significant area of resistance here. Back down and zoom it in here. So we were at a significant resistance high. We studied this range, this consolidation range, or whatever you want to call it, here into the black box between the blue and green shaded area. Finally broke out above that, which I made note of, that it would look to go higher if it did that. Pushing into the 1870-90 level, the orange zone on Friday, and then breaking through there and pushing all the way into 1950-1940, the purple shaded area. So here we are, hesitating up here. For us to go higher, if it's going to break higher and make new highs since 2014, multi-year highs, it's got to get through 1950-55 before it'll do that. So far, it's had a difficult time doing that and finding resistance here into that same level. Take it down to the 4-hour time frame, and as we get down here to the 4-hour time frame, it's not going to change it much. We can see that resistance already happening here. So as long as it's underneath there, we're looking for evidence of reversal. Evidence of reversal could be multiple things: candlestick formations or charting patterns that improve our confidence in reversal. reversal. I don't think we have anything like that yet. So what we're kind of looking for is the continuation of the trend, which would of course be the continued sell-off of the US dollar or strengthening of the euro, looking for the break of 1950 and the continuation higher. Often I say, if you're going to buy something, it's better to buy it at a lower price. So I would like to see a pullback to the orange zone or maybe even the green zone before looking for a new buying opportunity, improving our risk versus reward for the euro dollar this week. Moving over to the GBP USD, last week we saw the market push through the black trend line, the long-term black trend line. Last week we saw it push through the 100 period moving average, and it's come right back up to challenge that right now. Let's go ahead and zoom it in on that, where it's come back up to challenge the black trend line, just above the 100 period moving average as well. We're just underneath the 1.2935 level, the green shaded area that you see here on the chart. Of course, this pair as well had the gapping from the weekend as it closed Friday at the blue candle, pushed a little bit higher on the weekend, which was the risk with the Jackson Hole Symposium going on over the weekend. So we knew that that was a potential risk, and that's what it did. It pushed right on through there and headed back up here into the low 1.29. So the green zone is our major decision point today. As long as it's underneath it, likely looking for resistance. A push above the green zone, we could be looking for a move higher. This may end up being a false breakout if the market pushes back underneath and even targets back underneath 128.45.70, the yellow shaded area here on the chart. So we're watching this closely to see if this is just going to be a temporary move higher, or is it going to be a real deal breakout and a turn back higher here for the pound dollar. Moving the trend line to cap the highs within the downtrend. The blue trend line shows us we've had a little bit of a push above there, but again, we're underneath the black trend line, so I think that's important for us to remember as well. 4-hour time frame doesn't change it much. It just tells us that the market, again, gapped a little bit higher, came back down, satisfied that gap. So that's not really a strategy that we're going to follow. If you're a buyer, I would say that the closest place to buy it would be your yellow shaded area. Look at the support back here, 128.70.45. Improve your risk reward by waiting for it to dip to the yellow zone before you buy it. If you're looking for resistance, reversal, and selling opportunity, that's likely as close as possible, 29.35. Look for it, find resistance, start to give you some clues to reversal to go back down. I don't think we have any yet, but definitely something to watch around that green zone, mid to low 129s. Moving on over to the dollar CAD, it's just been floating lower over the past few days. Nothing real extreme. It has been floating lower, but nothing really extreme. I'm going to go ahead and zoom it in here on this currency pair as well. You can see the support back here. Look at this, where the blue circle is. 1, 2, 3, 4 days found support and reverse. So we're definitely watching 124.30. Is that orange shaded area. Definitely watching that as a potential support level for the dollar CAD, just like it was over on the left hand side. So if you're a buyer looking for it to turn back higher, obviously that's the place to begin looking for it, is into 124.30, the orange shaded area. Otherwise, back above the green zone may give you some upside expectation. Sellers, if you're looking to sell this little fall off that we're having here for the dollar CAD, obviously the best place to do that would be into resistance and into the green zone. You can see back here that same period within the blue box, the best place to go short would have been the green zone because it provided lower risk and higher reward targeting the orange zone. So if you're a seller, the green zone. If you're a buyer, the orange zone are going to take interest here early on in the week with limited news today. Not much else to say about it except for the right now. We're halfway between the green and the orange shaded area, and we need to wait for it to reach one of these levels before we make our trade decision for the dollar CAD. Moving on over to the USD JPY. Similar situation, truthfully, between the yellow and the purple shaded area. I'm just going to go ahead and zoom it in on this after I mention the fact that, of course, the purple zone, we can see the green and the blue circles back here has held as support and resistance before. Underneath there's the orange zone. So let's keep those circles in mind where the purple and the orange shaded areas are. Now let's go ahead and zoom it in, and we can begin to see what's been happening. 1, 2, 3, 4, 5, 6, 7 days now. Just bouncing around here. Obviously, your best place to go long if you're looking for a dollar strengthening move would be the purple shaded area, 109.10, 108.85. If you're looking to go short, the best place to consider that would be back up here towards the yellow shaded area. So both of those levels will be important for us for the day today, the yellow or the purple zone. And of course, a breakdown of the purple zone, we look for the continuation of the downtrend, which it hasn't done yet, by the way. It hasn't broken that 108.85 level. or a break above the yellow zone may look for some reversal. So right now, those are your two areas to watch for opportunities. Closest possible to the purple zone, closest possible to yellow zone. Of course, the trend is down, so if you're looking to trade that trend, you want to get as close as possible to the yellow zone before taking a short opportunity for the US yen. Moving on over to the AUD USD, I do have a holdover trade from last week, 79.05 being the buy scenario. Locked in profit before the weekend, and that trade is held out. So we're sitting with about 39 pips of profit on that trade, but it's being capped by resistance into the mid to upper 7900s. We'll zoom in on that here in a second, but the trend has been up, so let's not forget about this blue trend line. The trend has been up. Now let's zoom it in on this, and you can see the orange zone. Look at this, 1 2 3 4 5 6 7 8 days now stuck between the orange and the pink shaded area. Nothing really new, because if I take this black circle and put it right here, you can see it's done that before between the orange and the pink shaded area here. If it gets above the orange zone, the black circle now shows us our expectation. Above the pink zone, let's go ahead and put an arrow there. Above the pink zone, we'll look for continuation higher towards the blue zone. Why do I know that? That's what the market did before. If it stays under the pink zone, though, just like it has for the past 8 or 9 days, the potential is another fall down towards the orange shaded area. And of course, a break through the orange zone, the blue trend line, could even shift the direction of the trend for us back down towards the yellow zone. So we know where our major decision points are. It's just a matter of waiting for the right opportunity. I don't think today is the best opportunity to go short on the Australian dollar. We've seen the dollar sell off on many currency pairs, the gapping from the weekend. I think the best opportunity here might be the breakout above the pink shaded area, above 79.65, to go back up towards the blue zone. At this point, though, it's had a very difficult time doing that. May give you clues to resistance and reversal to go back down from the pink zone. Just be watchful for that. I don't think we can really count on that quite yet. Let's go ahead and zoom it out a little bit here. I don't think we can count on the reversal to go back down quite yet. I think, again, the trend is still up. So we want to continue to focus on that. Possibly the break above the pink zone becomes our next opportunity for the Australian dollar. Let's move on over to the NZD USD. Some interesting things happening here. The blue trend line, of course, we broke through that a couple of weeks ago. The black trend line has been the falling trend. Not too hard to see that we have been in a downtrend along that black trend line for a few weeks now. Let's go ahead and zoom it in on this a bit. You can see the market just kind of rattling around between the orange zone and the green zone. Bottomed out last week into the green zone, had a very difficult time breaking lower, and now has bounced off that a little bit. Let's watch this black trend line and orange shaded area this week. Let's go ahead and take it on down to the 4-hour time frame. The black trend line, orange shaded area, I think will be very interesting for us to watch. Let's go ahead and pull this over here like this and move it out like this. So it'd be very interesting for us to watch into the orange zone. We actually spoke about this in the live trade room last week. We have Fibonacci lined up there between 72.65 and 90. Maybe even closer than that would be right in the middle, where we see Fibonacci inside the middle of the orange zone. We also, of course, have the black trend line. The risk there becomes the market breaks above 72.90 and goes higher. So we know that the orange zone has a significant boundary of resistance with the black trend line, Fibonacci, historical support. So if we're looking to go short, that makes the most sense. Of course, Forex Black Book is red. We saw the last time we saw a red Black Book trend bar and arrows or signals here. That's right here where the black circle is. You see 2 red arrows. Let's watch for that coming right back up here into the orange zone. So a rally, resistance, red signals with the red trend bar. That could be what we're looking for here once again into the orange zone for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.